couple news stories for us, but now let's bring in our next guest. It's going to be Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Welcome back to the show, Alan.
Good morning, Tom.
Okay, do you want the W flag? Do you want to run around the room with the W flag? Your theory on the markets has been hitting spot on here, Alan.
Well, nothing's changed. The trend does not end. And so, it makes me a bull market genius. You just got to be able to be, especially now, it seems like we've got more division in the macro market. Now it's much more of a stock pickers market. So that it does work to my advantage. And that's what I've been waiting for.
Yeah, and you know what, Alan, I had a chart earlier on in the day with the S&P 500 at record highs. The number of companies above their 50-day simple moving average is only about 61% of the S&P 500. So maybe there's room to more room to run into the end of the year, right?
Yeah, it very much looks that way. 6,300 have been my target in the S&P for a long, long time. From that drop from the top, and so. We still haven't quite gotten there. The NASDAQ is what's starting to light on fire here. We've broken out of the NASDAQ, and 25,000 on the NDX is the upside target, which is still about 15% away after a full V recovery. So there's still a lot more upside. But again, what I like right now is the separation in stocks. It's not a get up every day macro market. It's a get up every day for specific opportunities that we can take advantage of.
Yeah, that's definitely, I think, an agreement. We've had a broadening out of the market, but at the same time, there's stocks out there that haven't done well, maybe poised to move higher. You did mention the NASDAQ.
Yes, let's use the word yet.
Yeah, and the NASDAQ is making a resurgence, and that's led this last leg up over the last week, settled at record highs also, but you got to talk about that move in Bitcoin here. Alan, what are your expectations? Are we just off to the races? You got to buy dips in there also?
Yeah, you can't fight it. And I think a lot of this has to do, think about the first buddy theory. Mr. Musk obviously has got his hand in Tesla, made an extra $50-75 billion by, befriending the administration. And I think that's very much the same that's going to happen with crypto. And you can see crypto's had a breakout. We talked just recently about a second chance in the miners. And so Mara, Clean Spark and Riot, CleanSpeak, and Riot, and they rallied, took some profits, came back. And so Riot's a great example of how you get a second chance a lot of times in markets, came back to its breakout. Riot's a stock that, it's a miner stock in the fact that not miner as in small, but a crypto miner. It's been traded between 10 and 15, and then, 12 and a half. When it popped above that, then boom, it's off to the races again. So, it was down 25% off its recent high of just a couple weeks ago, whereas crypto was only about 3 to 5% off the high. So you could see that there was some risk-reward advantages there in that play. And I can see that spilling over, into gold, the same kind of theory. Gold is hovering right now, trading sideways around 26.75, which is about the halfway point of that drop that we saw in November. And if you look at some of the gold miners and look at some of the gold companies, look at Barrick Gold or something like that, they've got some really, really positive risk reward if that trend can get moving again.
Yeah, you mentioned the miners, and they've been slumping. GOLD, Barrick Gold, that's pulled back quite significantly over the last couple of weeks. And Alan, is that all going to be related to the dollar? If we see some continued weakness off those high levels from the dollar above 107, if we see that pulling back to maybe 105.50, I think Phil Strebel had that on his radar. That'll lend some support to maybe some of these miners and the commodities, right?
Yeah, it lends support to essentially to everything. Obviously, we're in a rate cut environment. And if you look out to the end of 2025, we're looking for rates to be about a point lower than we are, full point lower than we are right now. So if rates aren't increasing, how does the dollar strengthen? That's against that trend. So if you see the dollar decline, and we had a fake out breakout where it rallied to 108 just a couple weeks ago and then came back down inside this channel again. So a decline in the dollar is very supportive. That could get gold on the move, obviously. That could help out, everything across the board. What it hasn't helped to bring it to the next level, what it hasn't helped is crude. We'll talk about that in a second. But if you look at the 10-year note yield, we've been between 375 and 475 for a year. We're at 4.25 right now. We're at the midpoint. So, we could get some pressure to the downside on the 10-year note yield. I know people are going to complain about it. They'll complain when 10-year rallies. They'll complain when it declines. It's mind-boggling to me as a trader. But anyways, so when you get down on the 375 level in the 10-year, you can see mortgage rates back at the 4 handle, below 5. So if you can get mortgage rates under 5, that thaws the whole real estate market, and that makes a market move. That makes the markets move, and we get some action there as well, which is helpful to the macroeconomic market.
Yeah, I think the housing market just wants it below 6 at this point, Alan. But a big stretch there.
I'm shooting for 5. I'm shooting for 5.
Yeah, I think if it goes below 5, we might be in trouble as far as economic growth goes. But Alan, finally, you mentioned oil. We got the OPEC Plus meeting kicking off here, and it's kind of popping around. But hey, consolidation's good. You mentioned yield consolidation. That's good for equities. Right. And then, crude oil. Get some consolidation there between 65, 71, 72. That's good also, right?
All right. I've always said that it all comes back to commodities. And commodities are base for everything. In this case, no. I'm going to argue with myself. The absolute no. You can see the energy stocks, XLE made new highs. Energy stocks are off to the races. We've had a big bottom bounce in some of the stocks that we've talked about here, Schlumberger, Halliburton, and Oxy, as far as risk reward. So they are moving in opposite direction of what crude is actually doing. Maybe that portends something. I don't know. But if you look at the chart pattern, we're at a giant apex wedge here in crude oil with these lower highs and higher lows. I have been hurt and disappointed and had my heart broken as a bull at least 3-4 times so far in this last year. So I'm not counting on an upside breakup, but it's set up. And actually, when the psychology of the markets get negative like I have, that's usually when something happens. But crude oil is just between 65 and 75. We're at the 70 level. Until we can pop above 70, sustained, and attack 75, I still have to be cautious. I can't put my heart on my sleeve anymore because I've been hurt too much.
Yeah, and it seems like you'd expect hurricanes, geopolitical risk to positively affect crude oil. It just hasn't taken place.
Nothing affects crude oil anymore. Nothing. It's just, I don't know what's going to do it, and that's not our job.
Yeah.
Our job is to identify how the market's going to move, not why the market moves.
Yep, just trade it. All right, 6,300 for the S&P 500, 25,000 for the NDX. Couple calls there from Alan Nuckman. Great stuff, Alan. Have a good day.
Thanks, Alan.
Yep, Alan Nuckman, Chief Market Strategist at Bullseye.